All attendees are in listen-only mode.
Good morning, everyone, and welcome to the presentation on binaries, call spreads, and Dutch brackets. How to determine which is the better trade choice. My name is Gail Mercer, and I will be the presenter for today. Now, before we get started, I would like everyone to read over the Nadex risk disclaimer. It is for your protection as well as ours. Basically, anytime you are trading, even with Nadex, there is risk involved. And therefore, you should never trade with money that you cannot afford to lose. Now, while you're reading over that, I just want to make sure that everyone can hear me and everyone can see my screen. If you could just type in a Y to let me know. Cool. We're doing good this morning. Now, for those of you that do not know me, I've been trading for well over 15 years now. And I started out with a company that actually programmed indicators for different trading platforms. And when I found out that we could see every moment of the day through price bars, I just fell in love with them. Now, I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I am a frequent contributor to Stocks and Commodities magazine, Traders World, and Top Shelf. I've also been a speaker at the Traders Expo, the Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options and Spread Using Candlestick Patterns, Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, and the New Trader's Guide to Trading Nadex Binary Options and Spreads. Any of these books can be purchased on Amazon. Now, first I want to go over the expirations for each of the instruments because it makes a difference when you're choosing which instrument should I trade, okay? So the binary options, the expirations that are available are the 5-minute, 20-minute, 2-hour, daily, and the weekly. And your maximum payout is always $100. Now on the spreads, you only have basically two different expirations, either the 2-hour or the dailies. Now they do offer multiple dailies, okay, but it's still a daily. And then it consists of a floor price and a ceiling price, and your profit or loss is calculated by using the indicative price index at expiration. Now, touch brackets, they always have an expiration of weekly, okay? They also consist of a floor price and a ceiling price. The difference is that they use an if touch basis to determine profit or loss. Now, they also use an expiration value in case it doesn't touch either the floor or the ceiling. But if one of those are touched, then that's what's going to be used to determine whether you made a profit or whether you had a loss. Now, to me, this is the first secret of all of this. In trading, there is no one size fits all, okay? We have a lot of different traders in the room today, and I can just about tell you, all of you would have different goals in different personalities. You would also have different time constraints, okay? You know, some of you may be doing this to supplement your income. You may only want to do a longer term time period, while others, you know, you may want fast, quick profits. You might be a scalper. Okay, so all of you are going to have some different types of goals and personalities. Now, a scalper, typically they want to capitalize on these really small moves, and they tend to take multiple trades within a day or within an hour, okay? Now, if you are a scalper, then you might want to look at the 5 and 20 minute binary options, okay? That's a good place to get started. For an intraday trader, okay, that means that you want to capture more of the move for the duration of the day, okay, but you're never in the market overnight. In other words, you might enter in the morning, but you're always going to be out at the market close. So those types of traders, look at the 2-hour binaries, the daily binaries, or even the spreads, okay? That's where you need to start. Now, if you're a swing trader, really their goal is to capture the majority of the move. Okay. They're not concerned whether they're in the market overnight or not. They just want to capture the bigger move. Okay. These, you could look at the weekly binary options or the weekly touch brackets. And I tend to favor the weekly touch brackets more. Okay. Any questions on that? Now, here's the second secret. It is not about your trade setup. And this is the question that I get asked the most. If I'm teaching candlesticks, if I use a 15-minute chart, the next question will be, does this work on a 5-minute? Does it work on a 60-minute? Does it work on a daily? Technical analysis will work across your time frames. Okay. Here's the difference though. If you are using a longer term time frame, then it's probably going to give you a better entry signal because you're not going to get as many. The closer you get to that market, then the more trade setups you're going to have. And that's also going to create more losses. Okay. I call it noise. The closer you go down in time to price, the more noise you'll get or the more vibrations you will get. It takes a while to learn those vibrations. Now, this is an example. It's a Euro US dollar chart, 5-minute chart. Okay. So it's very quick. And you can see, if you're just using either, the plus sign or the dot for entry with, let's say, a bullish bar, you had an entry long here, entry short here. Short, you would be long, 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 short, short. Okay. So in all, you have 7, 8, 9, 10, 11 entries. That's on a 5-minute chart. And this is just from Asia into the about 1 hour of the London session. Okay. Now we're going to take that same chart and we're going to look at it from a 15-minute standpoint. A 15-minute standpoint, you're using the same entry. Okay. You want price to come back to the plus sign for, form a bearish bar. You have 3, 4, 5, 6 entries on a 15-minute chart. And then over here on the 60-minute chart, you have 4 entries. Now notice I didn't change my entry mechanism. I didn't change the indicators. All I did was say, okay, instead of a 5-minute, I want a 15-minute or I want a 60-minute. Okay. It's just going from, 9 trades down to 6 trades down to 4 trades. Okay. If we go one step further and we go down to a 240-minute chart, you now have only 3 entries. Okay. Again, it did not matter about our entry technique. It didn't matter about the trade setup. What mattered is the longer the time period, the fewer the trades you will have. And that matters because it depends on whether you have the patience to sit and wait for that trade to set up. Okay. Now, these are generalizations that I tend to teach everybody. Okay. First, I like to anticipate where price is going to go. Now, in this case, you can see that you're at the red plus sign. My anticipation would be that it would come down to the low and exceed the low. Okay. So what's the difference between where price is at now and where you anticipate it to go? It's roughly about 8 pips. Okay. So if you're looking to trade this, you really wouldn't want to use a touch bracket. Okay. Because you're only going to get an 8 pip move. Okay. In this case, I'm more inclined to do a binary option because it's probably going to be a smaller move. Does everybody understand that? Any questions so far? Now, once you determine where it's likely to go, your next question will be, how long will it take to get there? Now, notice this is during Asia that I pointed out this trade, okay? It was about an hour and a half before Asia opened, okay? So Asia is a smaller time period. It has lower volatility in that session. So in my opinion, it's going to be after 8 o'clock. Now, since it's after 8 o'clock, that tells me I probably should not enter it, except for the 7 to 9 p.m. New York time. What are the red plus signs? That's indicator that I designed with using the ATR. So in this case, and I'll just highlight it with a pen, this is where the entry signal came in, okay? But you needed to wait at least until 7 to get the 9 p.m. expiration. Does everybody understand that? Because would you anticipate the euro dollar to move between 6 and 8? I wouldn't. Okay. And the reason that I wouldn't is because there's no market that's open other than Australia. You're not going to get a substantial move. Any questions on that? Now, how do you determine which product to use? And, when I look at Nadex, I don't look at one trade strategy. I don't say, okay, I've got to trade binary options. I look at everything they have available because to me, it's just different ways to make money. Okay. I'm an investor and, if I can make money with it, that's what I'm going to do. Now, sometimes that means you're going to lose money, but my goal is, okay, if I can make money, then I'm going to utilize any of the instruments they have available. Okay. Now, if I am expecting a big move, okay, I'm going to use either the spreads or the touch brackets. Okay. Why? Because I want a higher return if I'm right. Okay. If my calculation is correct, if my reading of the technical analysis indicator is correct, then I'm anticipating a bigger move. I want to make more money if possible. Okay. That's where I'm going to bring in the spreads and the touch brackets. Sometimes I will even add the binary options to that. Again, I'm utilizing everything they have available, but my preferred method will be the touch bracket. Now, if I'm expecting a potential retest of a high or low, then depending on, whether, there's enough room there and I do measure it, then I'm going to use a spread, not a touch bracket, but a spread. Why? Because of the if touched. If it comes back and it tests a low or it tests a high, okay? let's use the low example. Let's say I entered long, okay? And I entered right at the low, and it comes back to test that low, which a lot of times it will do. The touch bracket you will be stopped out of. I call it being stopped out of because it touches the floor. The trade is dead, okay? Now, if you're wanting to go short and you expect a test of the high and you entered right at the high, okay, then if it goes back to test that high and you're short and that's where your ceiling price is, then again, you're going to have a losing trade because it touched the high, okay? So you do have to pay attention to where you anticipate it to go and where they could potentially test for either support or resistance. Now, a lot of times when I'm using a touch bracket, I like to use touch brackets to make sure I have sufficient room for price to come back and test that low and then move in my direction, okay? That's when I'm going to use the touch brackets. So in this example, you can see my entry was right here, but I want my touch bracket above this high, okay? Because I do not have to wait until it comes back to touch that red line. I can always exit early with the touch bracket. So I want to make sure that when I'm entering, I want the ceiling or the floor prices to be either above or below these areas. Let's say that I was entering here, okay? Then I would want to make sure that the ceiling price is above this area. If I'm entering a long right here, then I want to actually make sure that my touch bracket is below this. Not really, Jeff. And this is what the difference is, Jeff. On the floor, on the if touched, okay, you have more room for this to move than if you're using a spread. Additionally, a spread's going to have a premium on it, okay? So let's say that this is trading at 13.33, okay? I might actually have to come down here to, let's say 23. Okay, that's going to be my entry price. That means I'm paying a $10 premium. Okay. Whereas on a touch bracket, it's pretty much going to be at 33. You know, it might be 32 or 31, but it's right on that money. Okay. That's where your difference is going to come in. Does that clarify it for you, Jeff? Okay. Now you can also always combine these with binaries as well. You could, feasibly combine all three of them. I did a couple yesterday on the euro, and I had a 2-hour binary, a daily binary, and a touch bracket all going at the same time because I was expecting a move off of the euro. Okay. But to start out with, just analyze your chart and say, okay, this is going to be a bigger move and it might last a couple of days. Okay. A touch bracket is going to be your better option. Whereas, okay, this is going to be a real quick move. So I'm going to use a spread or a binary. Okay. Now, trading does take discipline, and I say this over and over again. And it kind of factors into which one you're going to use as well. If you're doing a higher time frame, I use the 360 a lot for the touch brackets, but you don't get many trades off of the 360. For example, the trade came in yesterday, but I haven't had a trade on that 360 today. Do you have the discipline to wait for that trade? Now, I do, because all I do is trade. Okay. Well, I take care of my mom, but I do everything from home. So I've always got my computer on, and I'll just come back here, glance at it, and then go do what I need to do. One of the platforms I have, I can run on my iPad. So I could sit and watch TV and just kind of glance over at my iPad. Do you have the discipline that it takes to wait for that trade? Because you don't want to be just popping in and popping out randomly. Okay. And what if the trade comes in while you're not at the computer? Okay. How are you going to react? You know, sometimes we get mad because we've been waiting for this trade forever. And guess what? The one time that we had a doctor's appointment, that's when the trade come in. Okay. So now we're put back into the position of waiting again. Okay. Do you have the personality to say, oh, that's okay? Can you set an alert? That really depends on the charting platform and the indicators that you're using. I do have alerts on my indicators. It goes to my cell phone. So can you do that? It depends on the indicators in the charting platform. Nadex by itself, their charting platform, does not do the alerts. Okay. Now, the other thing is, after you have had, let's say you had 5 consecutive losses, okay, can you still go back and trade your trading plan? And sometimes that will apply even if you're making money. Let's say you had 5 winners, okay, can you still maintain your trading plan? Because a lot of times, if you make, let's say you make 5 winners, oh, well, I know what I'm doing now. I don't need that trading plan, okay? And then you have a series of losses. Then you decide the trading plan doesn't work. Okay. Well, it does work, but what are you doing? You know, and that's something we don't really like to look at. Okay. We'd rather say it's something else than our own fault. And I mean, I've run into that, and I train people that go through that, because it's something that every trader goes through. Okay. Now, you can always visit my website at TradersHelpDesk.com. You can also email me at gm@TradersHelpDesk.com. And let me bring up my chart. Okay, so here's one of the charts. Can everybody see my chart? Okay, so yesterday morning, and I'm just going to draw on this one, and it'll kind of give you an idea. Yesterday morning, this one developed, and it was on a 6-hour chart, which is 360 minutes. And I believed that price would go up off of this. So my entry was just about here. Now, the way that I did this is I had, for the duration of this, I had 2 2-hour binaries. Okay. I had 1 daily, and then I had 1 touch bracket. Now, I can't remember what the ceiling price of the touch bracket was, but I remember that the touch bracket was somewhere around 112.22. It seems like it was 1.1220 to 1.1222. I can't remember, but I entered right about here, which was about 80. Okay, so I was carrying about $60 of risk. Now, this was early yesterday morning. My anticipation was that it would go, and I want to be more exact on this one. So my anticipation was that it would go up here to 35. Okay. And that's exactly what it did. And I exited. Okay. Because I anticipated this is exactly what was going to happen. And when it got here, you needed to wait because it'd probably come back down. That was the technical analysis that I did. Okay. Now, with that one trade set up, I created 4 different trades, and I could have created a spread as well. I just didn't like the premium on the spread. Okay. Now, if you're a beginner and you don't like to be in the market, because I was in this, I want to say about 8 or 9 hours. Okay. So, I mean, it was a pretty long time for me because I usually do 15-minute binaries. But in this case, I anticipated where it would go. I knew where it would go if it did go up. And I also knew what my risk to reward was. Now, I set it, well, the floor level was at 1220. If it had came back and taken out this low, meaning that it closed below it, I would have exited. So I would not, unless it just all of a sudden went against me, I would not have risked the full risk amount on that. Does everybody understand that? The 1220 would be my worst case scenario. That's what I'm trying to say. But I don't always wait for the worst case scenario. Well, today is a good day to show you. It happened actually on the British pound. And this is what I mean by worst case scenario. Do you see this bar on the British pound? It went from 29.59 down to 28.73. This may have hit my worst case scenario. Okay. In other words, this moves so fast. If I go down to a 15-minute chart, this moves so fast that would have triggered your worst case scenario. Okay. But those do not happen every day. Okay. This is why we plan for the worst, but a lot of times you could have, exited prior to that. Does that clarify? You can exit anything that Nadex has, you can exit before expiration. You can exit the binaries early. You can exit the spreads early. You can exit the touch brackets early. Now, the other reason I really kind of like doing the touch brackets, let's see. Let's look at the NQ. I don't typically like to be in the market at the opening for the NASDAQ. But yesterday morning I was. And it seemed like it was right in here that I got in. Because I noticed you're making, higher lows and higher highs. And I said, it really looks like the market is going to go up. Okay. And this also shows why you need to pay attention to, the prior lows. In this case, do you see how it made this low over here? So when I'm looking at doing the touch bracket, I want to make sure that the floor price is below this level over here. And I know it was, maybe it was between 69.45 and 69.50, I believe. So you had an entry price right here. you had a floor price over here, and my anticipation was the market was going to go up. And of course it did. Now, in this way, if you can find them and they're close enough here, then you can actually go in and use it to capture the majority of the move during the day. Okay. In this case, again, I was out about 12:30. It was between 12:30 and 1 because I had a coaching session. So, I was able to capture most of this move. And because I made sure that I was, below this, then that meant that I could actually stay in and not have a loss there, because this bar is typical for the opening of the U.S. market. Now you can see I didn't anticipate to stay with this the full week. I could have, okay, but I'm more of that intraday trader personality, okay? So today we're back to 70.21, but I actually think that hit the ceiling price on the NASDAQ. It seems like it was at 70.60. So you had a huge move here that it actually hit about 1:30 this morning. But again, I'm one that I don't like to be in the market overnight. I can still use the touch brackets, but generally it's only maybe 1 or 2 trades I might get off in a week using the touch brackets. Does everybody understand that? Any questions? And see, this is also where you do have a spread option available, but you're going to pay a premium for it. So let's say that this was trading at 69.61. It may be up here at 69.70, where your entry price is. Or, it could be higher depending on the volatility they think they're going to have. Okay? Whereas with the touch brackets, you don't have that increase in premium, which is why I love it. Any questions, guys? It's been a wild day today. Now let's just say that maybe you have a bias to the short side right now, okay? Where would your anticipation be? Well, my anticipation would be, okay, they're going to take out this low at 70.20.5. Okay, now I'm always going to look, okay, what's the difference between where it's trading right now and this line? Well, it's about 13 points. Is that something that I can trade with a spread or with a floor or if touch bracket, or do I want to use a binary on it? If it's not moving, I'm probably going to choose a binary. Whereas, oh man, yeah, we got a report, it's really going to move, I'm going to use either the spread or the touch bracket. I do lean more towards the touch brackets. What are the charts that you use that you can send alerts from? Well, you can do it through TradingView. I like TradingView because that's the one that I can bring up on my iPad, my iPhone, and I can do all kinds of stuff with TradingView. The one that I do my alerts with, that I send my own alerts to me, would be multi-charts. And give me just a minute and I'll show it to you. And some of that really is dependent on your indicators too, Roland. You can do it in TradingView, but I don't think it is as, what's the word, elegant. So this is multi-charts, and I have everything set up in a Excel spreadsheet like, okay? So I can get an alert on any of these columns, okay? So this is the one I told you about that I traded yesterday, in which this had made a low, and I anticipated it to go back to this ATR, which is also the relevant fib line. That's that yellow line. Now, if you want to get more advanced, because that yellow line stopped it, then you could have also traded it right back down. But there's alerts on everything here. That depends also, Axel, on, kind of who your data provider is. If you're doing forex, because you have Oana, and then you have forex, and then you have FXCM. I do the FXCM because that's what I use in multi-charts. Because for multi-charts, I get my data through IQFeed. But this one is a lot more elegant for alerts. But, and this is the thing, I use this because I can do a lot more in multi-charts. Can you send trades right from the chart? For what market? You can't trade Nadex directly from the chart. You can bring it up on your monitor or your phone or your iPad. But if you're trading like forex or indices, yeah, you can trade directly from the chart. Do you have to understand the futures to understand the Nadex binary? Connie, that's a really good question, and I would say yes, because, the binary, the spread, the touch brackets are based on an underlying, okay? So if you don't understand the underlying, then, I think you're at a disadvantage when you're just trading, a Nadex binary chart. I think it requires a little bit more than that. You have to understand the underlying. And here's a great example. The NASDAQ, okay, that moves in 25-cent increments, okay? So if you're trading a touch bracket, if it moves 0.1, which it does in Nadex, what's the value of that? Well, it moves according to the underlying. So in order to make $1 on a touch bracket, okay, it has to move 25 cents. And that's just a really simple concept. The other thing is, if you're trading let's say the Nadex binary on the NASDAQ, but Apple has an announcement today, okay, then you're going to need to know that, because it's going to affect the NASDAQ. Any course for dummies on this is hard to understand for a brand new newbie. Yes. If you go to nadex.com, okay, and I'm going to bring it up for you, Armand. If you go to the Learning Center, go to webinars, or you could click that one up there that you can barely read. Go to on demand. If you want, say, you want to learn binary options or call spreads or forex, You can choose any of the subjects here, or you can also do by the presenter. So for example, if I just highlight mine, there's a lot of webinars on here that you can actually go to that would cover, from like a beginner standpoint for a newbie. For example, the crash course in trading forex binary options. That may be a great place for you to start. Any other questions? I do thank you all for joining me today. I hope you enjoyed the presentation. Oh, you're welcome, Jeff. Oh, thank you, Axel. What is reserve? That the reserve, when it says, when you do for binaries and then it has a reserve up there, usually that's the part that's remaining as far as cost goes. For example, to go into the market is $1, to come out of the market is $1. That's the exchange fee, Connie. So the reserve, you would have $1 in reserve. Yes, multi-charts has a dome. In fact, you can't get closer to TradeStation than what multi-charts is, because I do TradeStation too, Roland. And you can do the dome on here. You can do really advanced volume analysis on here, Roland. These are advanced charting platforms. I think. No. Any other questions? All right, everyone, have a wonderful day. And don't forget that on Sunday nights, I'll be doing a forex review, just to show you what I normally do on Sunday nights, just as the market opens for the week, and how I kind of plan my week. Because believe it or not, I don't just sit here at the computer all day. I can actually look at the markets, plan what I need to do, and then pretty much know what my work schedule is for the week and where I anticipate the markets to go. And we're going to do that Sunday. I believe it's at 7 p.m. New York time. All right, everybody have a wonderful week, and I hope to see you Sunday night.